look at the Q2, you're absolutely right. If you deduct some of the restructuring efforts and one-times, our margin came in at 7.6%, which is even slightly above our expectations in a difficult environment. And this was only possible based on our great brands, great products, and obviously a strong team spirit. But coming back to your question, what really counts is the reported margin and reported result. Our reported result stands at 10 billion euros, significantly down versus the previous year. Our reported margin is just above 6%, and this is certainly below our ambition and also below what we can deliver as a group based on these great products and also on our global scale. And if you look a little bit deeper into the number, it becomes very clear. We have a cost problem at Volkswagen brand, specifically in the German plants. We have to address this, and we will.
Yet, when it comes to some of the comments you're making this morning, I just would like to clarify something on the costs. You're saying we must make significant efforts on the cost side in the second half in order to achieve your targets. Should investors interpret this as with perhaps seeing new cost-cutting plans from VW Group?
We have to step up on the cost side. Look, if you look into the second quarter, we confirm our outlook. Based on a great product momentum, we bring about 30 new models in the market. This year, some of the great products stand behind me, e-Macan, Q6 e-tron, to name only a few of them. And we have a good order bank, a solid order bank of 900,000 cars in Europe alone, which brings us well into 2024. But we operate in a challenging environment, specifically pricing-wise. And so we have to make significant efforts on the cost side, productivity, fixed cost reduction to achieve these targets for 2024 and beyond.
There's some speculation that you're going to close your Audi plant in Brussels. Is that part of your new ambitions to cost cuts going forward? Can you confirm that that's the plan and whether perhaps you're considering further closures in Europe?
If you remember what we said on the Capital Markets Day last year back then, we want to reduce our production capacity in Europe by 10%. The European market pre-COVID stood at 60 million cars, and after COVID, we run about 40 million cars, and we don't expect the European market to grow significantly. So we have to adapt our footprint, and there are several measures. For example, in Audi Zukunft, we reduce the capacity in Ingolstadt and Neckarsulm. At the Volkswagen plants, we reduce the very expensive night shifts. For example, in Wolfsburg, here where we stand, in Emden, in Zwickau, and there are several measures to adapt. But we not only look, obviously, on capacity. We look on productivity increase in the plants. We look at fixed cost reduction. As you remember, we want to reduce our overhead cost by 2026 by 20%. And last but not least, we have a huge potential to draw even more synergies in the group.